So someone asked me a great question on Instagram that I wanted to share with everybody. And the question was, how can I buy an apartment complex just like yours? And what was the process in doing the renovation, in renting out the units, and pulling permits? So instead of just answering the question to just her, I wanted to create a video to provide value to everybody. So, for a little background, she's referring to my 20 unit apartment complex, which I bought for $350,000. And I got this off market using my direct mailing campaign. And I'm probably putting in around $100 to $150,000 worth of renovation. So, roughly, I'm all in for around $450,000 to half a million dollars. And my goal is to renovate the units and raise the rents from around, I think when I took over, it was around maybe 300 to 350, all the way up to $500. And after doing this plan, I hope that the ARV after repair value is around $700 to $800,000, being very conservative. I'm gonna do a cash out refinance out of my hard money loan, and then hopefully, when I do that cash out refinance into long term debt, I'm gonna pull out my down payment. I'm gonna pull out my renovation cost, and hopefully a little bit extra money on top of that. If not, that's fine as well. So, um, for some background, that's kind of at a high level, but let's take a step back. And pretty much, I sent out 1,800 letters over the span of 6 months. I closed on two apartment complexes during that time, my 26 unit, my 20 unit. And this owner sent me I sent a letter in like early 2021, and he actually wrote me a letter back in early 2022, almost a year later after I sent that letter. And he just said, "Hey, I got your letter. I'm looking to sell. I lost your number and your email. All I had was your address, so I'm writing back to you." And when I received that letter in the mail, I was really surprised and also excited because he took the time and the effort to write back to me, which means that he's more of a serious seller. So I reached out to him, called him back, and just said, "Hey, I got your postcard. Like, tell me about the property." And he just said, "It's a 20 unit apartment complex. Um, they're all one bedroom, one bath. There's a couple of studios as well." I think at the time when he owned the property, 15 out of 20 units were, occupied. One unit was completely burned down. It happened due to a kitchen fire that happened 5 years ago, and he just kind of left the unit unrenovated and unrented out, and just stated that, "Hey, I've owned this for I think about 20 years now, and I'm looking to sell to basically take the money and invest it into a business venture that I want to do." So, and he just said out the gate, like, "I just want tax assessed price, and I'm happy, whatever that is." So out the gate, if you follow my videos or if you're part of my course or one of my students, I typically recommend that you look at three numbers or metrics to make an offer. The first is net operating income divided by the market cap rate. The second is the cost per unit, and the third is the tax assessed price. And you take all three of those and you take the lowest offer price, and the lowest offer price is always a tax assessed price. Um, so out the gate, I knew if I give them tax assessed price, it's going to be cheap, right? It's going to be a good deal. I'm going to have instant equity day one. So I was immediately excited for that deal. So I looked it up. It's public record. I just Googled it, and turns out it was worth the tax assessed price was $415,000. So that's the offer I made. And so I knew the price. I knew it's going to be a great deal. I asked for the profit and loss statement for the past 12 months, which he had on paper, and he had to scan it over to me. I asked for a rent roll, which his property manager gave to me. And, so once I had all the information, it's easy for me to underwrite this deal. So I just said, I asked my local property manager that actually lives nearby the apartment to say, "Hey, like, what type of rents do you expect if I renovate these units a little bit?" They kind of said, about 500 to 550, depending on the time of the year. So basically 20 units, $500. It's $10,000, in gross income. Expenses 50%. So that's 5,000. So I have $5,000. And then you have to do your debt service. And whatever that is, that's your positive cash flow above that. So that's how I quickly underwrote the deal. And I presented this deal to, believe it or not, 10 lenders. And unfortunately, a lot of lenders said no. I had so many no's. I think it took me asking 10 lenders before the 11th said yes. And, I asked Bank of the West, who I worked with for my 26 unit, they said no. I even used his lender, the current lender on the property, and even they said no. Like the lender for the property said that, yeah, this owner doesn't have a good reputation. We have to beg him to make any repairs, for the roof. We have to make any repairs for the exterior, and it was just very difficult. So they were just like, yeah, we're not interested in lending on this deal. So I just knew in my heart that, hey, it's a good deal. I'm offering to this price. It's the ARV's and be worth $780,000. I was persistent. Like, I'm just gonna ask until one lender says yes. And the issue I was running into was that since the property was only $400,000, the loan was too small. A lot said no for that. So it just took huge persistence where I just called every single hard money lender there was out there. And finally, I found one, and the one that I ended up using on closing the deal. And, I had the down, I think 25%, 9% interest only. It was a 12-year term of a 3-year extension at no extra cost. So my 12 months is actually coming due in May of 2023. So in about 3 months now. I'm filming this in February. And I have the option to extend it to August if needed. So I might need to do that depending on how it's going with the renovations and renting it out. And they would also give me $100,000 of renovation, but I had to upfront the money up front, and then they would reimburse me after an inspection and after I prove that I've done it. I actually have another video talking about my experience of that and the difficulties I'm going through, so just check that out. I don't want to talk about it in this video. And basically, I just told the hard money lender, like, hey, like the owner wants $450,000. Would you lend on it for this? And they said no. I said, all right, well, if the price was $400,000, would you lend? They said no. I said, well, how about $350,000? And they said, you know what? We actually will lend on this property at $350,000. So I asked, can you please give me a pre-approval letter so that I can provide to the owner to justify a lower price? Right? And that's what they did. They gave me a pre-approval letter, and I came to the owner and I just said, hey, owner, I presented this deal to 10 lenders, and these are the reasons why they rejected the deal. Bank of the West rejected it because the income wasn't enough. They just weren't interested in this deal. Even your own lender that you recommend for me rejected the deal because they know there's a lot of deferred maintenance in the property, and they didn't want to deal with it. But I had this hard money lender who's willing to finance this deal, but we're going to have to lower the price from $415,000, which is the tax test price, down to $350,000, which is a $65,000 cut in the price, which is a hard pill to swallow. But he said, you know what? Hey, Steven, I really appreciate you going through all this and trying to help me. I'm going to sign the contract, write it up, I'll sign it. I just said, great. I wrote up the purchase and sale agreement. He signed it, sent it to the title company, and then basically started the whole process of due diligence. I inspected all 20 units, which is what I preach. And yes, there was one burned out unit, which I anticipated was going to cost me $30,000 to renovate. I just finished renovating it. It actually cost $40,000 to finish renovating it, fast forward. And, fortunately, I was able to hit my goal of $500 per unit roughly. I was trying to aim for 550, but it kind of fluctuated. Some was 500, some was 550. So I was happy with that. And when I took over the property, a lot of units went vacant. It was 15 out of 20 when I bought it. I think in the first 2 months of me owning it, I went from 15 all the way down to 7. A lot of tenants left because of bed bugs. A lot of tenants left because I was doing renovations. I was kind of averaging for the big turn units where like the burn down unit was a full gut rehab with permits through the county, new electrical panel, all that stuff. That was like $40,000. But for the other units that required a more nicer turn, it was around $8,000. And for ones that required very minimal work, like just touch up, paint, flooring, it was maybe around $2,000 to $5,000 per unit. I had to turn these units. So yeah, like the only ones I really had to pull permits on was the burn down unit because I had to do electrical and the general contractor coordinated all that. So it wasn't too bad. But after the units became rent ready, my property manager just advertised it on Facebook Marketplace, which is what I taught them, as well as their own website, as well as Zillow. And, we're able to, I think, rent out maybe about 5 units at this point. So I'm at 12 out of 20, which is 60% occupancy. But to make this financeable through a bank, I need to get around 90%. So I need to still rent out 6 more units. And I have around 3 months to rent out 6 more units. So I'm under a little bit of a time crunch at this point. But what I'm hoping is that I can show my lender what I'm doing. Hey, I've already rented out 5 units at $500 a month. Even if I get to like, let's just say 16 out of 20, which is 80%, or even 14 out of 20, which is 20%, 70%, I can show that, hey, trust me, I can get these rented out. I've already proven I've done it. And hopefully they'll give me a permanent loan on it so I can get out of this hard money loan. So, overall, it is possible. There's a lot of steps that go into this process. Obviously, you can hop onto my weekly Wednesday sessions at 7 p.m. Pacific. If you want to be invited, just drop your email down below. I'll send you an invite. I offer one-on-one coaching if you don't want to be in a group setting. The Q&A sessions are completely free. The coaching sessions require an hourly rate. And if you want a more structured learning environment, or it's A through Z in exact sequence, then you might, check out my course that I have, right? So it's really up to you how you want to do it. But I offer all 3 options, and I basically teach people how to find their deal using direct mail, how to underwrite the deal, how to make the offer, how to do the due diligence inspections, how to find your property manager, how to find your general contractor, how to renovate the units, how to everything. There's a lot of steps that go into it, and I've done it 3 times, and I'm teaching people to do it. So if you want to do what I'm doing and follow my same exact journey in scaling a real estate portfolio, about other investors, about syndicating, then you might find a lot of value from this. So, hopefully this answers your question that you gave to me on Instagram. Once again, I really appreciate these questions because it gives me the opportunity to make videos and answer it and give value to more people. Please make a comment down below if I didn't answer something that you asked, and hope to see you in the next video. Thank you so much.